Hey everyone, it's Mike Valtos. Welcome to the early morning edition of the Orderflows market analysis for Tuesday, October 17, 2017. It is 4:11 a.m. Chicago time, and I thought I'd get this little video, sort of get myself back into making these videos every day. Last week I don't think I really made that many videos, but sort of taking a break. I got some stuff going on in my life I needed to address, and I also got this webinar coming out on Thursday, the 19th. So if you haven't registered, be sure to register for it. I'll be talking about some things I haven't really covered in previous webinars, so it should be interesting. So let's just get started. A brief disclaimer as required by law. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Some people ask me, why do you bother with this disclaimer in every video? Well, one, the CFTC requires it. When you talk about the markets, it can be construed as financial advice. I remember when I moved to Singapore and I had to take this. They have in the US you have the Series 3 and that's it. It's quite basic, but in Singapore you really got to be taking like a financial advisor's program or license in order to trade. They've actually added an additional license you have to take in order to be like working in the bank. You have to have these different modules with the Monetary Authority of Singapore. Because basically, if somebody calls the bank and says, "Hey, Valtos, what's your view on the Japanese yen?" And I say, I think you should buy. That can be construed as advice, and it's just one of those things that it's people come to trading because they see these videos, they see people posting themselves with next to Ferraris on Instagram and stuff, and majority of all that stuff is just get rich quick hype. And people do get rich trading. I'll be the first to admit that. But people also get rich selling houses. Okay, that doesn't mean that they go out and they flip a house tomorrow and make $1 million and they're an instant millionaire. No, it takes time, right? It takes work. You work your way up to success in the markets, and just as you would in any other industry. So you need to learn what's required to become successful in the markets. In other words, don't quit your day job yet, unless you can devote yourself to trading the markets and go all in, so to speak, give it your full concentration and your full attention. Then don't quit your day job yet unless you're willing to commit yourself to the markets. So the tools I use in this presentation are the Orderflows Trader, the Delta Scalper, the Price Rejector. And the Orderflows Trader is the volume footprint chart. Delta Scalper is the tool I use to help read the delta in the markets, and the Price Rejector is the tool I use to show signs of price rejection in the order flow. These two indicators are additional indicators that help traders analyze the order flow without having to do it themselves. I understand that there's a lot to look at in order flow, right? And coming in as a beginning trader to order flow, you may not know what's going on. And this is similar to trading with looking at so many markets and having so many positions on at once. You can't keep track of what the heck is going on. And with order flow, you got a lot of things to look at, and sometimes it's hard to keep your focus. That's why I created a couple tools to help sort of narrow it down and take that analysis off from you. Because when you come into order flow and you think, oh my gosh, I gotta be looking at delta, oh my gosh, I gotta be looking at imbalances, oh my gosh, I gotta be looking at this type of prints, things like that, it can become very overwhelming. I found the people that do well with order flow are the ones that stick to a few things and build their trading plan and their method of trading around those things, whether it's the Delta Scalper or delta by itself or imbalances by itself. They get the understanding and then they build on that from there. So that's why I create these tools, is to sort of give you that building block, because I see other people, there's just a new order flow software just came out, another footprint chart, 3 years ago, there were only about half a dozen footprint charts out there. Now there's twice as many out there. But, what's the point of putting out a footprint chart, for traders if you're not going to teach them what to look for and, how to trade with the footprint? I mean, it's just, it's just a tool. Okay, sorry, I just got interrupted there. But anyway, let's just jump in and start looking at some charts. Enough of this preaching here. Okay, so this morning I got an email from somebody relatively new to the Orderflows trader software, and he was asking me if there was in the Eurocurrency, if there was the O2X trade. Actually, I don't see one this morning. I mean, I'm gonna go back to, I got to reply to his email, but what I saw though in this morning was off this low here. I don't see any reason me buying this low here with the divergence, or this low with the divergence, but this low here with the divergence, again, so you got 3 failed divergences. I'd watch out if we take out this low here, 117.92.5. If we take out that low later in the day, I'd be looking to sell it. But what you have on this low is the divergence, and you got the ratio afterwards. To me, that's very bullish. You also have the delta scalper on that low as well. So I know that something's happening in the delta and it's changing on me pretty quick, and be alert. So you got the delta scalper and you got the ratio and divergence in the next bar. Even if you get in a bit late up here at the 01, 02 level, you did get a nice move all the way up here to above 10. You got another bearish ratio here, not another bearish, it's a bearish ratio. Then you got the delta scalper gave a sell, and it just chopped on you back and forth before selling back down here, where we're coming back down to the low here. So I'll be very curious to see how it's gonna, if it's gonna take out this low or not pretty soon. Again, 92.5 is that low. If we take it out, I wouldn't be surprised. I said you got failed divergence, divergence. It did hold. We did rally up a bit, but again, we're testing that low again. I wouldn't be surprised. We're coming into it with a bearish ratio and a bearish ratio. I wouldn't be surprised to see us break through that low. We'll see. It could happen pretty soon, actually. Okay, so this is the yen. It was kind of a quiet morning today in the yen. We do have this low that was made here about 2 o'clock, just after 2, and you got a divergence. You got the ratio in the next bar. Did it go up? I mean, just kind of went sideways here. Did test the high again, which was encouraging. Sort of came off, but right now we're just hanging around unchanged right now. So really, nothing to get too excited about. I mean, if you're long in this trade, I wouldn't still be hanging around in it. It's 2 o'clock until 4:30, and it's sort of just going nowhere. Honestly, after it fails to take out this high here and sort of comes back down, I'd be just looking to get out what you can out of the trade, rather than wait for it, see if we're going to take out the high or anything. Nah, just get out. It's an hour, it didn't pay off, get out of it. Okay, the Aussie dollar this morning, again, also kind of similar to the yen, kind of tight range. At this low here, 158, you do have the price rejector. That's this green line here. It's a doji bar, but it is showing some signs of price rejection at a low to me, which is important. We rallied up to the high of the day, actually made a new high. You got a divergence, no ratio, and we're still just hanging around here. Now it's interesting because look at this bar that we're in right now in the Aussie. Where did it trade back up to? It traded right up to that point of control of the bar on the high, which again, if you're looking for the market to come off, watch the bar that's the high of the day. Look at the point of control. Watch that level. If we're really going to start to sell off, this level should hold, right? We should rally back up to that level or around that level and then sell off, which right now it is. But again, it's a very slow moving market. We've been in this bar for 45 minutes, and there's just not a lot going on in these Asian currencies at the moment. Okay, this is British pound really quick. So we, from 2 to 3, we started making these new highs here. No reason to be selling these highs. You get up to this one, a possible sell. You got the negative delta, you got the red candle, but you probably want a little bit more. Here you got you got this small imbalance here you got a single print, which indicates price rejection. You've got a divergence, so you're starting to see some signs in there. And but look, like what I was just trying to explain to you in the Aussie dollar. Excuse me, in the Aussie dollar. Okay, so here you have your high, right? You got the red candle. This next bar, what did it do? Traded up there, and then the candle ended, and then you went higher. Now you've got a new high. You got a red candle, point of control right here. Where did this bar trade to? Traded right up to that point of control. Got one tick through it. Okay, fair enough. One tick through. It's not like traded all the way up, back up here. It's holding. So that's a sign that this high might hold. You're seeing the resistance levels being put in with the point of control, and this one sells off relatively nicely. I mean, obviously we had a number come out. It was 330 here. That's why you see some sort of thin volume there. You get back up here. You get within a few points of a few ticks of the high. You got the red arrow indicating an imbalance up there on the high. Some trap traders. This is a trap trader signal. You had it up here. You have it here. And both times the market sold off. Here you have a stacked imbalance that failed, and we're just a little bit lower right now. I'll say a little bit lower. We're around unchanged. I mean, we're lower from the high is what I mean. Speaking of which, let me take a look back at that Eurocurrency, see what that's doing. Okay, so the operation was a success. But the patient died. We did make a new low. Like I said, I was expecting us to make a new low. We made a low by a tick, and then we bounced back up here. We took out the low of 92.5, went down to 92, and we are back up on 99 right now. But again, you got another divergence. We'll see if this one's going to hold as well. Again, this is the thing that I hate about trading breakouts is this. I used to be a big breakout trader back in the 90s, and that was my whole thing. That was my whole spiel, was range extension breakouts from Tom DeMark and Larry Williams. And technically that's a breakout, but it's a breakout by one tick. But then you get a bounce, so you're getting short here, and what happens is the next thing you know, it's rallied against you. You get stopped out. That's the problem you face with breakouts. Not all breakouts work. Here, right, if you traded this first breakout, yeah, that was nice. You got from 04 almost straight down to 94. But then if you're selling this breakout, you get this bounce back up here. You're not going to take that much heat. You're going to get stopped out and then hopefully look for another breakout. But anyway, I won't get into that whole trading strategy. I got to find my notes with it. It's one of those things, right? There's that saying in sports, quitters never win and winners never quit. Well, it's, even though this whole range extension breakouts is a profitable way to trade. The whole Toby Crable fund, is how many billions of dollars was built around range extension breakouts. This doesn't mean that what he's doing now is what he was doing back in the 90s. His trading evolved, so it's not like you quit necessarily. I'll say I quit a range extension breakout trading. I've moved on to other forms of trading. Even though I don't trade that way right now, I guess it's not like, well, I quit that way. No, sometimes in the back of my head, I'm always looking at when we're coming into highs or lows. Yeah, I still want to know, are we going to hold, or are we going to break out of those, or what's going to happen? So it's not necessarily a quote that's truly applicable to trading. I can understand, yeah, if you quit trading, you'll never win at trading. Yeah, but just because you move away from a method of trading doesn't necessarily mean you quit it. You just moved on to something else that you feel works a little bit better. And it's a game of inches in trading. It's this works a little bit better, so I want to stick with that. And when I say this, I mean the new your new method of trading. You're always trying to improve your trading one way or another. So if you can incrementally, unfortunately that's how it generally works in trading. You're incrementally improving your trading. It's not by big giant steps. It's just usually I'll say it's a process, but it's work, right? It's something that happens over time. You get better and better and better at it. So sometimes you move away from one method of trading and into another method of trading. So anyway, that will conclude it for today. And again, if you haven't registered for my webinar, please do. I try to keep those things informative. Yeah, I know there's a little bit of a spiel on the end, but where I push my software. But again, the reason why I push my software is because I feel it's good. I feel it adds value for the trader. you know, I mean, at the end of the day, that's what you want to do. People just want to learn how to trade. And sometimes does it cost money to learn? Yeah, it does. I mean, you could sit around in the dark. You could go out and buy, you know, an order flow charting software, volume footprint chart for a couple $100, not even, maybe less than $100 at some places. But if you're not going to get the resources or the training or the guides or anything like that, what's the point? You know, I mean, what's the point? It just doesn't make sense. I mean, you're just wasting your money, because then you'll never really learn how to trade with order flow. I mean, you can. I mean, you could wander around in the desert, and sooner or later the sun will come up, but it could be a long time before the sun comes up. So anyway, thanks for watching this, and thanks for listening to me preach. Have a great day, and bye-bye, everyone.